All right, good morning and good afternoon. So this will be a review for yesterday's trading. All right. So for yesterday's morning session being Monday, so it indicates this going into so that we know what we are working with. All right. So this is the price action we are dealing with now. So going into morning session, we indicated this low here, this sell side liquidity here. So we had this sell side liquidity here, expecting a mechanical sell model coming for these lows here, this lows, and ultimately this low. So you indicate the midpoint of this week because this is a very long week. So be interested in the midpoint of it. Outline, draw that out in time. So we had this drop in price here, and price left this imbalance here. And when it does this, we noted from the market structure, after when price leaves an imbalance like this, at the future time in price tries to rebalance that imbalance. So we had this imbalance here. If you draw this imbalance out in time, this is price here rebalancing this imbalance here. When it does this here, this is now an intermediate term high. And when an intermediate term high is created in price, we do not expect that intermediate term high to be violated. So dropping down to the 15 minutes. This is what we had here on the 15-minute time frame. So we had this as the midnight opening price here. And to the far left, we have the Sunday's opening price here, which is this low. And here we indicate the 8:30 open. These are the opening prices we're interested in. Every single time we come into the chart, we are interested in openings because price goes above opening to facilitate smart money sell entries and below openings to facilitate smart money buy entries. So here we have the 8:30 open. Yeah. So because on the 1 hour time frame, we already had price made a rebalance of that imbalance. On the 1 hour time frame, we noted a market maker sell model that we're interested in coming for these lows here. That means we're interested in price respecting premium PDRs and using those PDRs as resistance to prevent price from going higher. So on that note, price swept this sell side liquidity here, and now this will be seen as a fake out by the uninformed. So here, this sell side liquidity will be seen as a support level. When I say support level, I mean like the typical fraud logic of how support and resistance logic works. So here, they will see this as a fake out and they will buy and place their stop orders below here. So here you have sell side liquidity resting below here also. So this was our target going for Monday's trading yesterday, but as you can see from the live video, price was interested in this buy side liquidity here doing London's trading, and then came down to our target and just shy away from the sell side liquidity. So this is what we had here for the review. So you had this buy side liquidity here resting above here, and then you had sell side liquidity resting here. So because we had the first stage of the market maker sell model on the 1 hour time frame already delivered, so we're anticipating the second stage, thereby going into the lower time frame, anticipating a factor nature of that second stage distribution. So on that note, this rally higher here that rebalance this imbalance now, this is our intermediate term high here. When price created this intermediate term high here, you are not expecting this high now to be violated on the 5 minute. So this is your invalidation point for narrative to change, for the market structure to change to from a bearish sentiment to a bullish sentiment. This high should be violated. So hence this here is an invalidation point. And as you can see, we went shy away from these highs here, making this an intermediate term high and this a short term high. So because this now is a short term high, during the 10 a.m. to the 11 a.m. window, this is typically when this second stage distribution takes place. So we go into the this time window to look for the second stage distribution of a market maker sell model. And as you can see, this as a market maker sell model, here is the first stage distribution, this imbalance here. So the imbalance is overlapping with the volume imbalance. So you draw that out in time. So here you have the first stage. And we noted that when a first stage distribution occurs, price leaves an order block or a fair value gap within the rally that went for the first stage distribution. So using this first set of order block, this up close candle here, you indicate this as a 5 minute bearish order block. So we had this here as the 5 minute bearish order block. So when price chased to this bearish order block now, we're expecting lower prices at a discounted PDRA. So when you take your fib from this low here, from this swing low to this swing high, every PDRA below the 50% is discount. So every PDRA below this 50% is discount, and every PDRA above it is premium. So on getting to this 5 minute bearish order block at 950, from 935 to 950, we then rejected this 5 minute bearish order block and price left this order block here on the 5 minutes. So you indicate this as a factor nature of this 5 minute bearish order block. So you have this price leaving this bearish order block. So for a bearish narrative, this will be your entry point, your stops above this high here, because this is the short-term high. You are not expecting the short-term high to be violated. So you place your entry position at this bearish order block here, expecting the second stage distribution of a market maker sell model, and your take profit below the equilibrium of this, which is at a discount. The algorithm goes from a premium level, from an expensive price, to a discounted level to which is a cheap price. So we're expecting price to come for the 830 lows and down below. But as it is Monday and we had Powell was releasing a speech at 1:55 a.m. So thereby this was a high resistance liquidity run, seek and destroy signature. So this is one reason why when trading Mondays, you should be anticipating a low hanging fruit objective. And for the ES, trading the ES or the US500, a low hanging fruit objective is 5 handles. So when you're at 5 handles, trading this set of conditions, you discharge, you take your fair share of price and you move out. All right. So this was the business on the 1 minute time frame. So right here, this was business on the 1 minute time frame because we have the factor nature of price. Here is an intermediate term high. So you indicate this as an intermediate term high. Let's make this red color. ITH, intermediate term high. And just above here, we have the long term high. And below here, which is sell side liquidity, we have the long term low. We are not, when bearish, we do not always expect price to come to our terminals because we can take out a significant portion of price action on the within the trading range. So you do not necessarily expect price to always come for your lows. This is the reason why taking partials is significant and beneficial as a trader. So when you have this intermediate time higher price, then drop lower and rallied higher. This rally higher to a bearish order block. We're making use of this order block here because this is more significant than this. So this bearish order block here, when you draw that out in time, this is a bearish order block inside of a bearish order block on the higher time frames, which is the 5 minutes. So here you have a bearish order block on a bearish order block, multiple confirmations giving you an indication for lower prices. So which is above the 830. So this was above the 830. So here is a short-term high. So when price made this short-term high here, price is now eager to go for lower prices. And on the live stream, we indicated this volume imbalance here. We're interested in this volume imbalance to act as a resistance to resist price from going higher short-term until we get to a discounted level. So here we have this volume imbalance here. Let's make this so we have this volume imbalance here, seeking a discounted PDRA, which is you have this imbalance here. You also have this midpoint of this up close candle here, the week of this. So you take your fib from this low to this high. The midpoint is here. So this is likely where you offload about 70% of your position, expecting lower prices. And as you can see, we failed to go lower. But when you've taken something off, when you've taken partials off around here, you've had this from here, you're selling from this here down to this place is about 5 to 6 handles, which is a significant move in price. And as you can see, when price dropped lower here and left this breakaway gap, this imbalance here is a breakaway gap. So we're not expecting this breakaway gap to be filled short term. So price dropped lower and left this long wick. We indicated that wicks are imbalances. So you take your fib from the low to the high of the wick. And what we are indicating now here is what was done on the live streams. So if you're on the live streams, this is the narrative in play while trading the session, the morning session for yesterday's trading. So we indicate this midpoint of this week. So we will take this off. So now the midpoint of this week now is the consequent encroachment of the premium week. So here is the consequent encroachment of the premium week. So price checks to the consequent encroachment of this premium week for lower prices. So when we trace to it here, price rejected here and one more time rejected it. So if you miss this entry here from these bearish order blocks, or you miss this volume imbalance here, after the price left this breakaway gap, your next entry will be an imbalance, whether a fair value gap or a weak. So your next entry after a breakaway gap is left in price action is an imbalance. So price rallied up over here and came to the midpoint of this week here, this premium week, because as you can see, you're at premium from that long-term high to the long-term low. This is the premium. This 0.5 level, which is 5727.4. That is the midpoint of it. So anything above it is a premium and anything below it is a discount. So we are moving from a discounted PDRA to from a premium PDRA to a discounted PDRA. So if you are taking a short position from here, stop loss above this, the candle that made this bakery gap, targeting the midpoint of this is about 1:2, risking 1 to get 2. So this is why you should seek low hanging fruit objectives, especially on a day like a Monday's trading. All right. So I hope you got something from this video. Have a nice day and goodbye.